Today we're going to be talking all about how to borrow 6.5 times your income on a remortgage product. Hello, welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things related to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who don't know Ifti is a trained accountant and mortgage advisor who's been in the industry for over 11 years. He is also one of the founding directors here at WIS. Welcome back, Ifti. How are you?
Hi, I'm very well, thank you, Gemma. How are you?
I'm very good, thank you. Today we're talking about sort of a new thing that's just been launched, this borrow up to 6.5 times income on a remortgage. But I think let's just start at the kind of basics, just so everybody kind of understands what's happening. So firstly, what is a loan to income? What does that even mean?
Okay, so it's comparing the loan you can get to your income, right? The easiest way to put this is how many times income you can borrow, right? So that's the easiest way in layman's terms, right? So if I'm earning, for argument's sake, £10,000 and the lender says you can borrow 5 times your income, so that's your loan to income, right? So, you can borrow 5 times your income. So that's kind of what it means, right? In layman's terms. So obviously in our world, you use these terms, but in layman's terms, it means how many times your income you can borrow. That's actually what it means, right? So yeah.
Yeah, all right. Well then, what is the standard loan to income ratios used typically?
Okay, so typically if you don't have any other financial commitments and you're below say 45 years of age, most lenders will give you up to 4.5 times your income. Right, so it depends from lender to lender, but most they cut off at about 4.5 times. There is not one who might do 4.75, some might do 5. That's kind of the going rate, right? But majority will stop at 4.5 times your income. So that's kind of the maximum that most lenders will do.
Okay, so then what is this new thing, 6.5 times income on a remortgage? What does it mean?
Yeah, I mean, it's very exciting news for some, right? Because it will help some of the people. So for example, a remortgage is where somebody's mortgage deal is finishing and they have to sort of find a new deal, right? So if they have to find a new deal, sometimes being able to borrow a little extra, in terms of your income, right? If your loan to income ratio can be higher, it's always useful. So somebody, let's say, whose sort of income has dropped over the last few months or gone, say, part-time. So for people like that, it can be helpful, right? Because there's better chances of you getting a mortgage. So for people like that, it's really helpful. This is particularly with one lender, right? With the remortgage side. With this particular lender, their rates are generally pretty good as well, right? So if your loan to income ratio was cut off at 4.5 times before, in the past, you were not able to go to this lender, right? Now suddenly it's 6.5 times, right? And now you will qualify with this lender. So you couple with good rates and loan to income numbers changing, you probably have access to better products, right? So that's kind of what is changing. So it's an exciting thing. We saw this happen in the purchase area, in the purchase market. There were lenders who were offering 6 times, 5.5 times. We were seeing that. But a lot of lenders were very sort of slow on the remortgage side. But I think it's a nice positive step that this lender has taken. Hopefully there'll be a few others who will follow suit as well, right? So that overall will help the consumers, yeah.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
So who will this product help? Like, who's this sort of in mind for?
So this is still a very new product, right? So with that, you have to be a little careful. So with this particular product, it has to be a like-for-like remortgage, which means if your mortgage is 100,000, you can only borrow 100,000 from the lender, right? So the numbers can't change, right? It has to be like for like, right? So it's not open for everybody. If somebody's doing some house renovation or doing extension, wants some extra money, that's not for you, right? Because it is for like remortgages. So in the past, if you were judged on 4.5 times your income, so these products may have not been available to you because your loan to income numbers don't add up, right? So suddenly you might find a cheaper product. So for people like that, it's very helpful, right? Because there's more options now for you, right? because you're not stopping at 4.5 times. And also it'll help people whose income has dropped, right? Say for example, if you're self-employed, right? Sometimes you're self-employed, your income can drop, right? Sometimes you have good years, sometimes you have bad years. So if your income has dropped, some of the mortgages may not be affordable for you. Now you have option, right? Because obviously, the loan to income ratio is high, right? Likewise, sometimes people go from full time to being part time or reduce hours. So if that kind of happens, your income might take a hit. There's another option for you, right? So for people like that, this probably is a fantastic product.
Yeah, definitely. So with every kind of product, there's always some sort of exclusions. Let's talk about what those are for this one.
Obviously, this product is very new. It's just come live, right? So obviously, we are also studying on this one. So this currently is only open for like remortgages. So if you want to borrow some extra money, this is not going to work out for you. So unfortunately, that's one of the drawbacks of the product, because it has to be like for like, right? And also, obviously, this is not available with all lenders as well, right? If there's a cheaper lender out there than this particular lender, you can't use this lender, because if you want a cheaper deal, it might be some other lender, right? That's what I said. Hopefully, there'll be more and more lenders coming into this space. But as of now, it's very restricted, right? So there's only, one proper mainstream lender who is offering this service.
All right. Well, thanks, Ifti. Do you have any other points to add to this?
Yeah, so obviously, like anything, right? There is one lender who's suffering 6.5 times, but there are other lenders who might go to 5.5 times. So, this lender may not work for you, right? So it's always good to sort of talk to an advisor, especially if you have to borrow some extra money, right? It's not something we encourage, borrowing extra money, but sometimes people don't have a choice, right? If they have expensive debt and they might want to consolidate, or if they want to do extension and they don't have the money, they might want to sort of look at options, right? So if this lender doesn't work, there may be other lenders who can offer you maybe 5.5 times your income or 5 times your income. It's always worth talking to an advisor, because your bank may not be the bank who's offering you 5.5 times income or 6.5 times income. But as brokers, we have access to lenders out there, right? So we generally know which ones work for who, right? So an advisor can help you on this one.
Definitely. Well, thank you, Ifti, again for some more great advice. I just want to put a little reminder out there, as Ifti said, these points may or may not be applicable to you. So please do talk to an advisor if you're unsure if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details below, as we are always more than happy to help. Another little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.